Hi and welcome to this live currency strength indicator table video with me, John, on this Tuesday the 24th of January. Here we have our tables in front of us. We have two types of tables. We have the trend traders table and the day traders table. These are highlighting the same studies but just showing us different time frames. You can see here some of the currencies are highlighted in green. That means there is a confluence between those two trading time frames, and that's where we'll be focusing some attention in these videos. The tables auto update every 15 minutes 24/7, so our members can see how the markets stand right now in real time. What are the tables telling us today? Well, it tells us that the Australian dollar is top of the trend traders at S1, followed by the New Zealand dollar at S2, followed by the pound at S3. On the weak side of things, the dollar remains the top of the trend traders at W1, followed by the Swiss franc at W2. On the day traders, we've got the New Zealand dollar topping the chart at S1, followed by the Australian dollar at S2, followed by the pound at S3. On the day traders weak side, however, we've got the yen topping the chart still, followed by the Swiss franc, followed by the US dollar. Now in this video we're going to be talking about the US dollar, and we're going to talk about, is it still okay to short the US dollar? Because all of the dollar pairs that we can see featured here, so we've got pound US dollar, Aussie US dollar, New Zealand US dollar, all those pairs there look to be reaching a top in the market. So when the markets do that, we don't particularly want to be aggressively getting involved, despite the tables telling us that the dollar is weak. So let's jump into a few of those charts. I'm actually going to start off here with the US dollar index, and you can see here on the US dollar index that the market has come down into a crucial area of support, which was the 101.25. Now the price has been in a sort of a bearish move ever since sort of towards the end of last year. We've kind of seen the price deteriorate here for the US dollar index, and that's caused, or that is seen across the charts on the major currency pairs as the dollar moving to the downside. And you can see here that we've most recently sort of traded within a bearish channel after breaking through the lows here at the 107.50. We've traded to the downside. We've come into this 101.25, which were these May lows of 2022, and we're finding a little bit of support here. Price has retested this area on a couple of occasions now, and we've failed to break through so far. Now, does that mean price isn't going to break through? No, of course, price could still break through this level, but at the moment, price is finding support. So we don't really want to be getting aggressively short here, especially because we're at support. But where would you place your stops? Your stops would be here. There's no reward to risk ratio. It's just a negative trade to even comprehend. So we don't want to be looking for our dollar short positions while we're in and around this support area here. In fact, what we would more likely want to do if the dollar is going to remain weak is wait for the dollar index to rally towards the bearish channel high, or even the previous range lows at 103.25, in order to then look for continuations to the downside for the dollar index. So definitely keep your eye on this, because if I go to one of our charts that are highlighted here, so let's take the New Zealand dollar for instance, really like the idea of being bullish this market, because the New Zealand dollar is the strongest on the day traders, second strongest on the trend traders. The dollar is the weakest on the trend traders and is W3. However, look where price is. If I just bring my crosshair in, we can see that across that crosshair, we're at these previous highs in here, and it's usually not a good idea to start getting aggressively long at previous highs. What we want to do is wait for a pullback in the market and then look for continuations. If the dollar does aggressively get weaker and it does trade through that level, and we see the US dollar weaken across the chart and the New Zealand dollar remains strong, then a break above 0.6550 would then give us the open space to trade up towards the higher time frame trend line here. Another example of this is on pound US dollar. We can see that pound dollar's come up into the 1.24 handle and these previous highs that formed back in December. So again, do we want to get aggressively long in and around this area? Absolutely not. We want to see price pull back first, maybe pull back into the one spot 22.50, then look to see if we get a continuation of the dollar weakness and the pound strength in order to look for longs back to the highs at 124. If we then trade through that, we've got the option to trade to the one spot 26.50. So today, if you are looking to trade your dollar pairs, I think this is one to sit on your hands and wait a little bit, because we need to identify a pullback in the market. So like I said, one thing you can do to identify that is if you go to your US dollar index, you can have a little look at the levels of support and resistance here. Like I said, we're back at the 101 spot 25, so we want to wait to see how price reacts at this point. Obviously, something fundamentally could be a driver for price to trade to the downside, so you also have to take into consideration that we do have some flash manufacturing PMI and stuff today, so that may be a move that happens because of the news. However, I doubt it from that medium impact news, but I would be expecting more of a pullback here now for the US dollar. So that's all I've got for you today. Keep your eye on that one. Sometimes it's best to stay away from the market if it is uncertain, and lots of our charts that are featured with the currency strength indicator tables at the moment are all coming into key areas of support or resistance. So just be aware that it might be a day of just waiting to see what happens next. Thanks for watching this video. I hope you enjoyed it, and I look forward to speaking to you in the next one.